Mr. Tajani.
Good afternoon, and thank you for joining us for the FinTech Hub session. Across the week, InnoTribe are looking to make sure that they highlight the amazing things that are happening around the world in different hubs. Yesterday, we looked at the Canadian hub, and today we will be looking at the APAC region. So it gives me a warm welcome to introduce our panel. So would you like to start?
Hello everyone, my name is Janos. I'm the founder of Supercharger. We're a FinTech accelerator based in Hong Kong and Malaysia, and I'll be mainly talking about Hong Kong to you today.
Good afternoon, ladies and gentlemen. My name is Mr. Akradesh Desyadet, Managing Director of Thai FinTech Association. We founded the association last year, being the chairman by Deputy former Prime Minister Kon Chaticawanit. Today I was very proud to be part of this panel discussion. Thank you.
Afternoon, everyone. James Lloyd. I'm based in Hong Kong, and I cover Asia-Pacific region for EY from a FinTech perspective.
Hi, everyone. My name is Zenon Capron. I'm the founder of Capron Asia. We are a market research and consulting firm focused on the financial industry in Asia, and also the co-founder of China FinTech. And I'm representing China and based out of Shanghai.
Hi everyone, my name is Danielle Zito. I'm the founding CEO of FinTech Australia, the National Association of FinTech in Australia, and I will be representing Australia.
So the way that these sessions work is that I will direct a number of questions to different panelists, and then we will open up for Q&A a bit later. So to start, tell us a bit about your hub in Australia and what things are exciting you there at the moment.
Yep. So I think Australia isn't often mentioned, our FinTech hubs across the globe, but I have to say that the story in Australia is actually quite remarkable. We've gone from, it is a relatively immature hub, however, it's an extremely sophisticated and well-advanced financial services centre. I think that Sydney and Melbourne are both respectively 8th and 12th in the sort of world hubs ranking for financial centres. So it's a very, very sophisticated market, very well-regulated market. In fact, the regulators are extremely well-respected through the globe. But in terms of the FinTech scene, it's been around for about 2-3 years in its kind of current sort of evolution. We have seen explosive growth. We've gone from around about 250 companies at the beginning of last year to our most recent count. Our estimation is probably close to 600, if not more, across the country. So FinTech is now employing some 10,000 people. Venture capital increased from about 450 million US to around about 675 last year. And I think we will definitely see that go much further this year. So we've seen some very, very significant deals most recently. But I think what I'd really highlight and what really excites me about the hub is just the quality of the companies we do see from Australia is very high. The founders of companies in Australia are used to working in a regulated environment, so they understand compliance very well. They're very experienced financial services professionals, so many of them actually used to run their own, couple of hundred people divisions within their own banks previously. And so they're, coming to the FinTech industry knowing exactly what the industry challenges are. And how they actually propose to solve them, which is why we're seeing quite a lot of interesting Australian FinTech companies now actually starting to hit the world stage and becoming very, very well regarded. And we're seeing some investment from some very significant major VC firms, particularly, for example, Sequoia China in the last few months, into a couple of Australian FinTech companies.
And what about the next 5 years? Where do you think the Australian FinTech market will be?
So we will definitely start to see much more expansion of FinTech companies from Australia through the region, particularly through Asia Pacific. And I certainly think we're starting to see some specialisation. One of the interesting aspects of Australia is that it's a very diversified economy. Financial services makes up 10% of our GDP, but the other major sectors are, of course, agriculture and mining. And so we are actually seeing a lot of FinTech companies sort of working in those intersections. So lots of really interesting companies in the blockchain space, focusing on things like supply chain for blockchain. We're also seeing a lot of innovation in the insurtech space. So you look at agriculture insurance and the greater availability of data when you actually start to sort of intersect that with IoT. So, data capabilities, cybersecurity capabilities, all of those things are emerging in Australia, but, resolving into very big strengths. The other thing that's also very exciting is the wealth tech scene. Australia actually has the 4th largest pool of what we call superannuation, but pension funds in the world, because we have a mandatory contribution system. And so because of that deep history of managing wealth and managing assets, we're seeing a lot of very strong wealth tech companies. And I think the data that we actually run annually as a survey with EY to actually understand the composition of the industry highlights that last year wealth tech was the third largest fintech subsector after lending and payments. And I think we'll see it really increase this year.
Great, thank you. Zenon?
Yeah, so going from one of the lesser talked about hubs, but still important hubs, to one of the most talked about hubs, I think, to anybody who's in this room or at Sibos, the scale of China and China FinTech is unmatched in terms of transactions, assets under management, models, payments. Everything about the industry dwarfs many of the other regions around the world. I think specifically around FinTech, we know kind of the FinTech story about Ant Financial, Tencent, and how they've created these platforms and incredible FinTech behemoths in the space. I think the thing that's changed over the past couple of years is a little bit more of a rationalization of what's happening in the market. So, we've seen increased regulations around peer-to-peer lending, increased regulations around credit rating and asset management, peer-to-peer lending, and things like that. So I think we're seeing a little bit of a rationalization around that, because for many years, China was the world's largest fintech sandbox. The regulators took this very much wait-and-see approach to the market. So I think that's gradually coming down a little bit, and clearly we still have these players that are in control of particular markets and particular segments of the market, but it's consolidated a little bit more.
And what about the next 5 years? Where do you think China will go?
Yeah, so I think we've seen a little bit of this already going internationally with the larger fintechs, certainly, and so that trend will continue. Initially it's been around partnerships or acquisitions, but I think we'll see more pure play of the Ant Financials and the Tencents going abroad with specific value propositions there. There is a lot that's happening domestically as well. China is very unique because of the population and because of the unique financial industry situation. So things like credit rating in China are very important for the industry there, but they may not be as important in Australia, where there already is a credit rating space. So, I think there will be domestic players that will continue to develop domestically and only focus on that market, but then increasingly we'll have these cross-border deals and outreach as well.
Great, and James, come to you. As you kind of, from an EY perspective, cover across the APAC region. So when you're talking about what's going on, give us your point of view from the APAC lens.
Sure. So, I guess I'm perhaps a little bit unique at the table insofar as just given we've got an integrated P&L in Asia Pacific. So in fact, we cover Greater China, ASEAN, Korea, and Oceania. So I guess taking it up a level to maybe some of the trends we're seeing from a cross-border transnational perspective, certainly I think the China outbound is perhaps the biggest macroeconomic or macro factor we've seen from a FinTech perspective. So what I mean specifically, as Zenon has already alluded to, the growth of an Ant Financial or a Tencent as they seek to internationalize regionally. We've seen considerable investment across Southeast Asia in particular, partnerships in places like Australia, investments in Thailand, investments in Hong Kong, but equally partnerships, in fact, in Canada, North America, EMEA, and so on. So I think there's the big China fintechs moving internationally and what that looks like, and the impact on the region in particular has been significant. But equally, there's the flow of China money, in fact, which I think has been another probably pretty significant macro factor in the development of fintech, in particular Southeast Asia. So if you look at a market like Indonesia, the second biggest market effectively in Asia Pacific from a population perspective, we've seen considerable investment, considerable partnership opportunities, and so on. In fact, directly from Alibaba, Ant Financial, SoftBank, Tencent, and some of the other big, Asia tech players. But equally, I think the response in many of these domestic markets to the China inbound has been a pretty significant factor as well. So, not only the response from domestic fintechs, let's say in Australia or in Thailand, as they seek to either partner with or compete against the big China tech players.
And what about the next 5 years for the APAC
Sure.
region? What do you think will be the biggest trends?
I think certainly a lot of people are talking about cross-border collaboration, certainly at a kind of a fintech or incumbent level, but equally at a regulatory level. So maybe I'll give you two quick examples of that. Industry sandbox being developed by MAS, the Monetary Authority of Singapore, in collaboration with IFC, World Bank, and the Association of ASEAN Banks, seeks to build an industry sandbox encompassing multiple markets across Southeast Asia, such that, in fact, Tier 2 or Tier 3 banks will be able to gain access to the type of fintech partnership opportunities, I guess heretofore only available to Tier 1. We've already seen a lot of regulatory MOUs or bridges formed, in fact, as far afield as the UK with MAS or HKMA, and so on and so forth. I think to date they've been rather limited insofar as they're more about information exchange, data exchange. Yep. But perhaps, and maybe for a discussion here later on, we'll see more from a standardization perspective, because I guess the final point I'd add is, if you're a fintech or you're a bank or you're an insurer, as you seek to build out a presence across the region, what you're faced with in Asia, more so than anywhere else in the world, is a series of currencies, a series of regulatory regimes, a series of different infrastructure constraints, and so on and so forth. So actually developing any standardization there is of critical importance if you want to reach scale.
Great. And in Thailand?
Yes, okay. Actually, I'm proud to be Thai and from Thailand. Thailand is not known for food and tourism industry anymore. We have a lot of fintech startup in the country lately. Just to give you a bit of background of our country, like we used to be a soft coder, like big computer firm like Thomson Reuters has set up our country to be a region of developing code, like IBM and etc. I think we used to be a follower of these industries. The good thing for that is that we are in the best location geographically between North China and also South Asia. So meaning that we have a big adoption rates from many programs of mobile applications around the world. However, not all of them have smooth and good transitions. For example, like if you heard of Uber and you heard of Airbnb, that not it's what you call regulated. Like Airbnb is not subject to be proven by regulatories, and also with Uber as well. This is a concern that if you develop the fintech programs in Thailand, you must have known the local conventions. If you ask me in 5 years' times, right? I think to be successful in running fintech industry and fintech companies in Thailand, I think the collaboration is a key. Yeah, if you heard like lately, there's a big payment gateway called Omisego. They launched 28 million US dollars. The synergy is that they team up with Japanese, Singaporean, Australian, and Thai, and they do regional presence and offering the products in Southeast Asia.
Right.
I think the problem of Thai people is that the languages itself,
Yep.
and also the open mindset that they're more locally, cater to Thai markets.
Right.
That's a limitation.
And in Hong Kong?
So when you think about Hong Kong, the first one, which is the obvious one, it's the smallest market compared to an Australia, compared to China, compared to Thailand. So what does fintech mean in 8 million country? So Hong Kong started its fintech journey about 3 years ago, and it was, okay, we're a small market, we have a lot of banks, so let's be a B2B hub. 3 years ago, there were 3 different phases in Hong Kong. The first phase was the startup phase, or the private sector phase. Startup by themselves, building up an ecosystem. And this was 2015, 2016. 2016, 2017, which is now it's the policy phase. And this year, from next year onward, is going to be about the output of the B2B deals. If Hong Kong is a B2B hub and we don't see strong partnership, then it's going to be questioning what is Hong Kong doing. The other one is coordination. Hong Kong is incredibly free market as a country. But I think there's something that we've underestimated is the insurance regulator, the securities regulator, and HKMA all at the same time coordinated their announcement around fintech sandboxes, which if we live in Hong Kong, you would never expect everyone to line themselves up that way. So clearly it feels that at the government, there is a coordination role which is happening, which maybe we're underplaying. So I think that's one thing which is important. The other one is from a Hong Kong, I think is redefining its fintech story. A financial center does not equal a fintech hub. So Hong Kong as a financial center is an inbound gateway into China. But as a fintech startup perspective, startups in Europe going into China don't go through Hong Kong. It's more Chinese companies maybe using Hong Kong as a platform to go out. And again, that's a model that has to be tested.
Great, and just for context, I'm from the London ecosystem, so any commentary that I give will be from the London perspective. So when it comes to collaboration and partnerships, I remember a few years ago when there was a lot of PR about this hub doing things with this hub, and I think that it's really important to move past the PR and get into the details of what is actually happening on the ground and through real collaboration and real partnerships. So it would be great to get all of your input on what are the unique strengths that each of your hubs actually offer, and moving past the hype cycle of FinTech, which started a number of years ago, to what has actually tangibly happened. And so if you have some examples, that would be great. Do you want to start, Danielle?
Yeah, sure. So I think I'll talk about collaboration through two lenses. The first would probably be internal. So FinTech Australia, given that we do represent the startup side of the community, we operate in an interesting environment in Australia where it's effectively a highly oligopolic structure. We've got the four major banks and then a very big gap between them and the second tier banks. I mean, the four major banks in Australia effectively hold 80% market share. So the FinTech community has actually come from quite a far way behind, but actually the biggest collaboration we have in the space has traditionally actually been with both Federal Treasury and the regulator. We have extremely strong governmental support, and it's quite bipartisan, which is quite unique in Australia. And as a result, we've actually managed to pass quite a number of FinTech-friendly regulations through Parliament. So actually sitting here now, it's a bit busy because we do have finally the GST cryptocurrency legislation passing through, private company legislation for crowdfunding. Of course, there was the guidance that ASIC released recently on ICOs, which was done, we had a conversation with them prior, talking to them about the sorts of things the community would like to see. And, certainly a very responsive regulator, both from ASIC's part as well as the government. So, things like the regulatory sandbox, the commitment to an open banking regime in 2018, these are all things that have been done through close collaboration with the FinTech community, but also with close consultation with the banking community as well. Then looking at that, continuing on that theme of sort of inter-community collaboration, I would say actually Australia is really far behind when it comes to bank FinTech collaboration. The research piece we ran with EY last year sort of highlighted that it was probably, I think 41% of FinTech startups in Australia listed that as one of their largest external impediments to growth. They found it very challenging to collaborate with financial institutions, and that is, again, because of that very defensive oligopolic market structure. When it comes to external collaboration, so this is now the second area where we're looking at international collaboration, I would actually argue that ASIC has more reciprocal data sharing or information sharing agreements than any other regulator, perhaps except for maybe Singapore.
Yeah, MAS.
Yeah, but Kenya, Ontario, like you name it, they've got it, and they do share a lot of information, but it's two-way. A lot of countries do actually see ASIC as a very leading regulator when it comes to sort of sophisticated market regulation. And besides that, certainly we're seeing partnerships again as well when it comes to FinTech companies looking to expand in other countries. Some examples, for example, AirWallex is a great international SME remittance company, secured investment from Sequoia China. As part of that deal, also had investment from MasterCard and are using that obviously to expand through the Asia region. So they're really, really healthy signs. Of course, I'm certainly looking at things from a trade perspective as well, and I think Zenon will probably touch on this as well, really starting to see some very close relationships between Asia and its key trading partners being China and Singapore. So I think you'll expect to see a lot of movement in that particular area on the trade front, particularly as it comes to both regulatory harmonisation as well as information sharing and cross-border partnerships.
So
do you mind if I just jump in on this, Danielle, just to level set a little bit, because I think it's important collectively when we talk about FinTech and collaboration to actually just get some communal agreement what we're referring to. What I mean by that is, I think we'll probably all agree that about, a vast majority of FinTechs are really building what would be called enabling technologies. So I think, and having done it myself and having sold into banks and kind of understand the base, what we call partnership is actually service delivery, frankly, for existing banks, insurers, and that's fine, and you can build a good ecosystem on the back of it. But I think let's also just separate out the enabling tech from the kind of truly, and it's an overused word, but a small proportion of them building genuinely disruptive, i.e. competitive positions. I think when we talk about what's happened in China, and Zenon will no doubt speak in detail to it around the ecosystem that's enabled the development of some of these tech players, yes, they may be sitting on top of existing rails and banks, but they're genuinely competitive. They're genuinely disruptive, whether from a wealth management perspective, a personal payments perspective, or anything else. I think it's interesting, just as we talk about different hubs in the region and we talk about the strengths of various hubs, for me at least, it's interesting from a cross-comparative perspective to say, where are we likely to see the next big Ant Financials or Tencents or Googles or Facebooks as they move into financial services? Or will it simply be a question of building enabling technologies for the benefit of incumbent banks or insurers?
Well, Zenon, maybe you can comment on the sort of collaboration and partnership side from an investment perspective. So Sequoia China was mentioned quite a bit, Danielle, and money is global. So is it possible if you kind of comment a bit more about the partnerships or collaboration that are actually happening from an investment perspective, where money from China is actually going around the world?
Well, let me talk a little bit about the ecosystem first, because I feel like that is a big part of the equation. I mean, when you look at the rails that Ant Financial and Tencent have created, it enables such an ecosystem around that, such that if you're a car hailing app, if you're a bike sharing app, if you're any kind of app or service that involves payments on the back end, you have your rails in place, and it's it's quick, it's instant, it's easy to integrate, and oftentimes it's actually sitting on one of those wallets. So that was kind of inadvertent. I mean, I think if you look at the development of mobile payments and digital payments in general in China, I mean, Alipay created it to solve the problem of escrow and e-commerce, and now it's become QR codes and the basis of so many other transactions. So I think a lot of the collaboration that we've seen in China is a bit inadvertent, that it's just kind of happened, that it's developed in this way. We see the same thing on credit rating. I mean, now you have credit rating platforms that are feeding into the peer-to-peer lenders, and there was no organization on the back end that enabled that, and even the regulators didn't enable that. It was just something that naturally happened with the development of the ecosystem. And I think that's quite, for China, I mean, even though as China FinTech, we help on the cross-border side of things, but there's not a lot of domestic organization that's enabling that. It's just the natural business environment that's growing that. The investment is interesting. I think in certain cases, a lot of the technology that's being developed in China, and we were talking about this before, if you look at credit rating as an example, a credit rating app, the PBOC credit database, the Central Bank of China's credit database, covers 800 million people, which is half the population. And then of that, only half have actual records behind them. Now, I'm Canadian by birth, yes, Toronto, but lived in the States for a long time, and being an American, I've had a credit card since I was 12 years old, and I have hundreds of thousands of dollars probably of transactions behind that of credit. So if one of those Chinese fintechs wanted to come to the US and do credit rating, they wouldn't really have a chance. So I think you see a lot of certain players like the Ant Financials are able to do the cross-border, and then Airwallex is a good example. And then there are a couple of Australian peer-to-peer lenders coming to China to enable like property transactions between the two countries. But I think a lot of the fintech development is very domestically focused. And so when you have these VCs that have money to spend, there's a couple of different plays. You can play domestically, and you can invest in something that you believe is going to grow domestically. And a lot of that is already controlled by the big players, or you can look internationally. And so, I think Airwallex is definitely a cross-border play, but there's a lot of investment. The Ping An Voyager fund that's being set up now, they're not necessarily looking at something that, ideally it plays in China as well, but it may just be for those foreign markets, and there may not be that cross-border. So I think money is either looking at a domestic play or going completely abroad to look at plays that are particular for other markets, if that makes sense.
Hey.
Okay. The collaboration in Thailand is so simple and so common here. Actually, even though the fintech sector is very small, but the landscape are a lot of variety. We have payments, we have crowdfundings, ICO, etc. You can name it, right? In terms of collaboration, right, they might collaborate with each other in the same industry, Thailand markets. But on the other hand, they collaborate in the region as well. Just to give you an example, right, there's a product lately called ClaimD, DI. It's an expression of you can claim yourself. It's a mobile application that you can you take a photo of your car accident, etc. This is a good collaboration that Thai FinTech have joined with Postbank in Singapore, right? And the other collaboration is one of the payment gateways that also Singapore as well that collaborate in Thailand. If you notice that there's a lot of collaborations here because again in Thailand there are requirements. For example, if you want to offer payment gateway in Thailand, you must have got approved first. So I think it's a good synergy in Thailand to having collaborations as such. Yeah, and then in terms of our local communities ourselves, right? We have private sectors, for example, telecom providers. They have provide incubations, accelerate, and joint venture capital as well. Yeah, that's give you a local scenes of Thai FinTech industry.
And collaboration and partnerships in Hong Kong, how is it looking?
Sure. So if you take collaboration, you bring it across Asia, you're going to have easy collaboration and you're going to have high friction and collaboration. So I think one of the things that we're not saying here when it comes to startups trying to collaborate outside is stuff around data residency, right? So how can you have two countries collaborating when data cannot move from one to the other? Then you're going to have regulators collaborating with each other, which is, yes, there's a lot of MOUs, but what's the output of that? And the reality is, even if you look at regulation, for the last 20 years, just getting securities regulators to work together on a market that we fully well understood took, decades. So I think those are the high friction collaboration. On the easy collaboration, I'll start on the academic side mainly because that's part of my hat. But this is already happening across Asia, right? So Australia, Hong Kong, and the University of Luxembourg is developing the world-leading research in fintech regulation on regulatory technology. And that's happening why? Because it's thought leadership. It can be done cross-border in a pretty easy way. And Australia has a strong data element. Hong Kong has a good financial regulation element. And Luxembourg is essentially, very international. The other one is state of market. So South-South transfer is actually very interesting. China has more to share with Thailand than it would have to share with Hong Kong or would have to share with the UK. So state of market will allow for collaboration to happen between markets that are similar. I know we're going to talk about mobile payment and mobile, but Hong Kong telephone rate penetration is 100% and banking rate is 99%. Versus China is going to be 60% on mobile on banking penetration, 100% on mobile, which is maybe more likely than what you have in Thailand.
Yeah.
And then you have e-commerce companies, right? Which those are the ones that can support that collaboration because sometimes they use non-financial data, meaning not subject to data regulation issues, and they power financial services on the back of non-financial data. So those Google, Amazon, GAFAs that you mentioned, or the BATs in China, maybe are going to be an easier cluster to create collaboration cross-border because from a financial perspective, it's actually pretty difficult for a successful fintech company to go abroad.
Can I ask a question? I mean, Janos, you looked at regulation quite a bit in the academic side of your career. I mean, is there, for the high friction engagement, is there any solution to the regulatory side of things? I mean, in fintech, are we going to see anything across the region for?
So the short answer is I don't fully know, but my best bet is as follows, right? Which is when you look at what eKYC has been doing in Singapore, a lot of us use the eKYC example, say, oh, wouldn't it be great for me to be in Hong Kong, I land in Singapore, and I re-onboard myself at the bank without an issue. But unless you do eKYC cross-border, there's no point of doing eKYC almost to start with, apart from the cost save. So I think that if there was to be a harmonization on regulation, most likely the start would be, from my perspective, in securities, on the securities regulator side, mainly because I feel that this is more internationalized versus central banks or banking authorities, which have a very sovereign national mandate because it's about financial stability, et cetera, et cetera. So if there was a start of harmonization, I would say institution like IOSCO would have a better shot at it than an institution like, a BIS or EBA or whatever, right? So that's how I would say this is where maybe collaboration from a regulatory standpoint may start.
I think it's a good question.
Sorry, James. I've just got to keep to time, so is it all right if I just keep going?
Yeah.
Sorry to cut you off.
Discussion.
So hopefully you can input in the next question. So the next question is actually about public-private sector working together, and two of you are non-for-profits, and some of you are from the private sector. And so what do you think can be done to provide more support in across those sort of sectors in order to make sure that you get more collaboration from government and from private entities? Hopefully you can feed into that, James.
Okay, let me start up first. Okay, we are the only non-profit organizations that help promote the fintech startups in Thailand and also that collaborate in Southeast Asia. So with regarding to that, we work closely with regulatory like Central Bank of Thailand, SEC, Securities Exchange Commission, and also OIC, Office Insurance Commission, right? They provide all the regulatory sandbox that I mentioned earlier, right? If you provide payment gateway, you need to get approved by Central Bank of Thailand. And if you offering trading exchanges, you have to approve by SEC, etc. So with that effort, right, we have worked closely with them in regards to give the member the most update regulatories and rules and regulations. Lately, we have a main hands-on with P2P lendings that regulated by Central Bank of Thailand, which we thought that it could be regulated and get approved by end of the year.
And Danielle, you're set up as a non-for-profit. Setting up as a non-for-profit, how does that help boost your ecosystem?
I'm not really sure it would sort of boost our ecosystem directly in that sense, but certainly it's given FinTech Australia a mandate to speak on behalf of the community. So the fact that we're actually separated from either the government or the incumbent community means that the voice we have is purely representative of the startup sector. So that's certainly been helpful from that perspective. But certainly, I mean, coming back to this sort of point about the challenges in collaboration within the sort of private sector even, we are seeing signs of that changing, and actually there has been quite a fair bit of movement from the large incumbents, particularly Westpac and NAB, who've both set up corporate venture capital firms that sit within their innovation departments. In fact, Westpac's is completely externalized but seeded by Westpac for their own thesis. So Reinventure Group is very active, investing in early stage startups in the arena. And we are seeing a lot of investments of those companies and maturity as they actually sort of start investing at early stage and then bring the startup sort of closer to collaboration with the bank as they mature. So that's actually proving to be very successful, and we've had a couple of major investments this year. Zip Money, for example, which is a consumer lender and payments business, received investment from both Westpac and NAB. Data Republic, another company that was actually seeded, has received multiple rounds of investment from Westpac and NAB, and are actually exchanging securely encrypted data between the two organisations, as well as Qantas Loyalty Group, and in fact have just launched a data accelerator program called Fueled under the auspices of Stone and Chalk, the FinTech hub. So there's a lot happening in that space, and certainly I think the government's role with respect to that has been in not necessarily placing bets on any particular company. Like, the government is very clear that they don't want to pick winners, but it's definitely through the investment into infrastructure. So you have the Victorian Launch Vic Fund, you have Jobs for New South Wales, two major funds that are actually helping to invest, whether it's in accelerator programs, co-working space infrastructure, or even things like the R&D tax incentive and accelerating commercialization grants that actually support direct collaboration between entities.
Senan?
Yeah, well, we're a commercial organization because if you say you're not-for-profit in China, it raises eyebrows and gets you more attention than you really probably wanted. And I think, I guess the flip side of that is that unlike Australia, there's not kind of a government, an accessible government organization to kind of look at FinTech overall. Although those organizations exist and the regulators have groups that are focused on that. And just with the commercial outlook of the FinTech industry in China, that's just kind of what made sense. I don't think there's too many private-public partnerships that exist and work. Ant Financial has done some stuff around charity. That's actually one of their blockchain examples is blockchain, charity on the blockchain. But yeah, for the most part, it's commercially driven. Just in general.
Great, and so the next question is really about the challenges. So it's really great to talk about the good things that are happening, but I think that in order to sort of look in the mirror and think about the challenges is also very key. So James, do you want to start with a perspective on what you think the main challenges have been in the APAC region?
No, I think it's a good point. I mean, I've yet to find anyone talk about how bad their FinTech hub is. I mean, I think the way I think about challenges in respective markets is, frankly, what are we trying to achieve? And this is a challenge I often make to some of the regulators pushing certain initiatives in markets is, how do we know when we're successful? So everywhere wants to be a fintech hub, and I think you'll struggle to find any country or territory on earth at the moment that doesn't claim to be a fintech hub. But I think for me, it's when will we know we've been successful? Is it about creating employment? Is it about creating competition? So in the UK, as you know, there's very much a competition mandate from the regulators. That's not the case, frankly, in a Singapore or Thailand or arguably in China either. So I think for me, the challenges are, what are we trying to achieve? At a very simple level, I think the more entrepreneurs building, early stage, growth stage companies is itself a success factor. And on that basis, I do think there are considerable challenges, not least of which incumbents, as demonstrated by the continued success of InnoTribe as part of Cybos, incumbents are waking up to the reality that in order for them to retain talent, in order for them to attract talent, they need to do more in this space. So perhaps one of the biggest challenges, I think, will be actually more and more people just saying, well, you know what, I did want to leave banking or I did want to leave insurance, but actually we've just built an accelerator, we've just built a lab, we're investing in all these exciting companies, so why don't I just sit still and do that? I'd be kind of curious to get.
I think in Asia alone, right, the challenge here it's languages, local languages, right? Look at that. In terms of Asia, you have India, Japan, right, Thailand, Myanmar, whatever, that they use different languages. However, we are the people who kind of blend, the culture is very easy to cope up with, easy to be mingled with. That is kind of complementing each other. But however, I think the very important is its local regulatories. Singapore, they're quite relaxed, but in Thailand and some other countries, they are more conservative. They kind of hold back, lots of approval, etc. Right? But however, I think to be successful in order to be a fintech company, I think you must find the common needs, common platform, because we are addicted to mobile phone. Everything was on the mobile device already. I think the successful rate and adoption rates of user in Asia is very, very high. If you can read this message and adopt yourself to be able to cope with these threats and challenges, you'll be successful.
And Jonas, the challenges in Hong Kong?
So Hong Kong is actually a good example. I think two challenges. One is human capital, and the other one is startups. So if you take Hong Kong as an example, there is currently one university with a fintech undergraduate course, but what I'm getting at is when it comes to fintech training of people, let's say Hong Kong can train 400 people a year, right? And let's say that Hong Kong hires 10,000 people a year in finance in general. Now, you need to make sure that those people have a level of understanding of what fintech is to some extent. Even if Hong Kong was to double its capacity of training people year on year, it would take Hong Kong 15 years to train enough people to get there. So I think human capital development and training is a critical element to have a healthy industry, which it's about education at scale, right? The second part, in my view, is startups. So one of the main challenges, there's not enough failed fintech startups in Asia. Or if you look at fintech in Hong Kong, 3 years ago, there were 140 startups. If you look at fintech in Hong Kong today, there's 160 startups. If you look at the two, they're still exactly the same, which is really a shame. It means that the defying statistic, more startups should actually die. A death rate of startups is 90% a year, right? So you have a lot of companies which are still surviving, which actually is a bad thing, because when you look at the quality of founders and teams, if those companies could fail and then join financial institution because you're an exhausted founder, or another startup because now you have a network, that would be hugely beneficial. So I think the startup death rate, because it's not high enough for some either it's moral, either it's cultural, either it's family, either it's grant financing, doesn't matter. Startup death rate is not brutal enough. And as a result, I think this is preventing good people to join financial institution or join other startups. And I think that's the other main challenge.
Danielle, the challenges in Australia?
Look, I think I've covered a lot of the sort of internalized challenges enough. So I kind of want to pick back up on some of the points we were raising about harmonization of regulation in the region, because really, I mean, that's exactly the point. The differences in the language, the differences in the regulatory climates, the differences in the infrastructure. We're talking about a market that has extremely sophisticated and advanced financial services sectors like Japan and Australia, very developed markets with consumers that are very digitally savvy, with traditional types of digital things like laptop computers. Versus other markets where, like India, et cetera, have gone from zero infrastructure to suddenly having, a digital identity card and a bank account through their mobile phone in a matter of like a couple of years. So the differences when operating in that region, it's really hard to transverse it without having a very good and localized knowledge. And that's, certainly from within the Asian region. I think a lot of Asian countries are exchanging a lot of information with each other. I mean, you can kind of already see from the panel, we're all very aware of what's happening within the region. But then you go outside of the region, and people, whether it might be from Europe or from Americas, are kind of looking within this region, and they sort of see it as this one big thing. It is not at all homogenous. It's actually extremely challenging to get in there and actually do that, which is why, the points about regulatory harmonization are very sound. I mean, it's no surprise that RegTech is an area that's kind of exploding, and you would think that that's something where, there's a base common need for everybody, and investment and growth tends to come where there's common need. But then when you look at that, actually, I mean, even though the RegTech companies are doing very well, again, because the regulations are so different, the localization of those products is very challenging.
Great. Zenon, in China, the challenges?
Not big challenges. I mean, I guess the regulations are a slight challenge,
right.
But honestly, the regulations just bring China to where it should be in terms of ensuring the development of the industry. I think the one challenge I would say is that because Ant Financial and Tencent are so dominant in the space, it makes it very difficult for smaller companies to come in. I mean, if you're a mobile payment startup in China, you might as well give me your money because I'll spend it better than you will, because there's just no market for that because it's so dominant. So I guess that might be the one challenge is, on one hand, China is the biggest fintech market in the world. On the other hand, we don't have the startups because it's just, we do, but in very niche areas. And because these certain players are so dominant, it becomes difficult to expand. But maybe that's not a problem because, Alipay works very well.
Yeah.
WeChat Pay works very well. So do we need another provider? From a competition perspective, maybe yes, but realistically, when they're driving the market so well, maybe we don't need somebody else in that space.
So one thing that has been key over the last 10 years is the growth of mobile. And a lot of the Asian countries have been really good at pushing forward the mobile boundaries. And I remember being in Vietnam last year, and the addiction to the mobile phone was very high. And so the iPhone was only invented 10 years ago. We're still at the beginning of the mobile revolution. So how do you all think that the mobile revolution and the way that mobile technology will impact fintech within your hubs will change over the next few years?
Yes, I think definitely, right? It needs a good infrastructure, right? Look at Vietnam and Indonesia, right? I mean, if you have a very solid infrastructure, good enough, then you can apply mobile application easily, right? And I think the second choice is that, the majority of the users, right? If you decide a product to capture or address like C+ income, like generation, like mobile device, I think this is a good turn point that make this fintech products, mobile application survive and successful in the region.
James?
I suppose I have a slightly contrarian view on this, which is to say clearly mobile penetration has taken off across the region, enables access to a whole range of services that were not otherwise accessible. But when it comes to financial services, in fact, you still need some level of KYC, AML, basic identification. And we talk about Vietnam. Yes, mobile penetration is very high, but bank account penetration is still relatively low. Yeah. Even just to take the China example, which is often used as the kind of mobile revolution, mobile payments, mobile everything, the reality is that Ant Financial, WeChat Pay, and others are in fact built on top of an 80% banking penetration rate. In fact, there's more debit cards per person in China per capita than anywhere else in the world. So they already have an existing underlying financial infrastructure upon which they've now built a mobile-first solution very successfully. But the ability to replicate that or transplant that to a market like Indonesia, for example, where you've got about 39% people have access to bank accounts, for that other 61% of people, it's not just a question of giving them a phone and now they have access to financial services, because there are clearly security and KYC implications in that.
And actually, it's just taking mobile, and this question to James from my own personal experience. I feel that when I used to live in the UK, I would use more often my mobile phone to do financial services transaction than when I came to Hong Kong. When I came to Hong Kong, actually I thought the ATM, which is funny, but the ATM is incredibly efficient, and doing transfer is better because I didn't have to carry the dongle. So when I do fintech interaction in Hong Kong, I more do it through my desktop, but it doesn't feel that financial technology startups are mobile first in Hong Kong. It still very much feel that they are desktop based. So I think mobile phone in Hong Kong is not necessarily a driver or distributor of fintech in the way that it could be in Thailand or in China. But I don't know if, James, you had the same experience. When I just feel I use slightly less mobile phone when it comes to finance in Hong Kong than I used to do.
I think you're absolutely right. Actually, this is the leapfrog issue that a lot of developed markets face, is that the reality is for everyone here in Toronto, has access to a bank account, a credit card, basic investment products, basic wealth management products. They may be suboptimal, but the reality is they're accessible. Yeah. So the ability to bring a new mobile-first, solution that's an order of magnitude better than what you already have, thus being able to drive mass adoption, not just early adoption, is actually very difficult. You go to China, where 10 years ago you didn't have access to any of these things. You still don't have access to credit cards effectively as a consequence of where people live. And an Alipay ecosystem or whatever else is so much better that they can drive mass adoption. So I think developed markets, in fact, are challenged on that basis.
And in certain cases, you talk about China, I think one of the reasons for success was the friction involved. If you look at a debit card transaction in China, now we're chip and pin, but it inevitably is chip, pin, signature, which is extremely heavily friction. And I have my phone configured now. I just long press on my home key, and I get a QR code that I can pay. And so I think there's so many different angles around this. I think you brought up a good point about the banking penetration. That in China, the banks are there, but people can't get access to the funding. And in Thailand, maybe the banks aren't there, or the access to the banks isn't there, and there's a different set of problems. So I think, the mobile is certainly in many of these places. You look at the penetration. I know specifically for China, smartphones, 75% of the market. And if you look at PC ownership in the US versus China, the US PC ownership is just north of 80%. In China, it's around 50%. So the device of choice is the mobile phone, and that's where people are going.
Because it's cheaper, right? Cheaper and handheld device. It's convenient.
You guys are going for the eKYC now too, right? In Thailand. So, with all the facial recognition and everything that's happening, I think it's just a matter of time before we
see. They even thought of face pay, face recognitions, and etc.
So that brings us to the end of the questions for this session. So a warm round of applause for our panelists, please. And now it's a chance for you to ask the panelists some questions. So the way this will work is we've got two runners here who will be able to pass the mic around. So with your questions, if you just stand up, say where you're from, and then ask your question. And please do keep as concise as possible.
Hi, sorry, me again. To all of the panelists, if you were a European or American fintech looking to expand into Asia, where would you start?
Wow.
Okay, one thing that I not recommend you in Thailand is payment gateway, because there are so many providers out there. So you probably go to somewhere else that we think is a niche or it's require computerization. I think the area that might be best for you in Thailand itself, like the fraud, risk. You see, because even though we kind of govern the country, but there's still the area that known for drug trafficker, human trafficking, and etc. This is the area that we probably look up for some providers in that regards. Yeah.
Anyone else?
Yeah, I think geographically speaking, you've kind of got to look at Asia as two sort of major markets. You've got China, which is just China. You could just go to China and do China, and that's it. Or you can look at sort of ASEAN region, and certainly Singapore and Australia are both kind of vying, and Hong Kong are vying quite heavily to be sort of like the regional centres. The argument I would certainly put forward for Australia is that Australia actually is a very multicultural country. We have something like a quarter of the country is actually like originally a migrant. Education is one of our biggest exports, and so actually there's a lot of people who come from the Asian region to study in Australia. They make business contacts, they make friends, they start working for an Australian company, and what we're actually trying to now see that we can do is say, well, if you're then going to go back to your home country, how can you actually then start building some business bridges and interlinkages between you? And that's certainly what we're actually starting to see that's very helpful within the fintech industry. There's already some very good examples. Trove is a really good, well-known one in the US that kind of partnered with Suncorp Bank to enter the Australian market and test the value proposition with a very sophisticated consumer base before actually then launching it back into America. And we're doing that to actually then go through Asia Pacific and as well to EU. So that's certainly Australia's case, but I'm sure that the guys from Hong Kong and Singapore, if they were here, would have other arguments.
I would say to properly answer, you would have to narrow down what type of fintech. So for example, you're a peer-to-peer lender, there's no point for you to go in Hong Kong. However, if you're a RegTech company that does capital market and you can support the whole stock connect, then you should go to Hong Kong. If I was to take a non-defined segment of fintech where you would go in Asia and you're European or American, go in Malaysia. Speak English, 5 times less the burn rate, proactive regulator. So I'm saying if you didn't define the sub-segment, I think Malaysia would be the good random entry point. But I think keep in mind that fintech, you don't have random entry point. You're a peer-to-peer lender, Hong Kong is not going to help you. You're going to be a payment company, don't touch Japan, because Japan is just like the octopus card or like the mass transport card. Yeah. It's 5 regulators for you to get that payment card out, right? So you have to keep in mind those realities. But if it was a random, where would you go because you don't know where to start, or maybe build a business from scratch, let's say Malaysia, 5 times less the burn rate, and you'll figure out Asia from an Air Asia flight, right?
It's an interesting one, Yannis. I mean, probably one we can debate offline.
Yeah.
I'll give you a very prosaic answer because I spend actually quite a bit of my time on this exact topic, helping European, US companies in Asia. The very prosaic answer is wherever you can get a bank account. Because the reality is that actually internationalizing a business as a fintech, particularly if you don't even think about it if you've got Bitcoin or blockchain in your business title or anything else, the reality is that opening bank accounts in all of these markets is very difficult. So I think you need to find, and of course with all the qualifying, like what type of business, etc., you need to find a market that is slightly more conducive to the others when it comes to facilitating the entry and account opening in particular for international small businesses.
Is that true in Hong Kong?
Yeah. In fact, it's at a government policy level now. The HKMA are being pushed from a government perspective to ensure account opening for smaller businesses.
Well, in London, one of the big challenges that I saw during my time at Level 39 was that when you bring founders into London, one of the biggest things is, well, how am I going to pay my staff in order to operate from London? And the ability to get a bank account is quite key. And if you are we're a Californian company, Token. We have offices in London, and our bank had to be a global bank because it needed to be able to do operations in America and London. And I think that regional sensitivity is pretty important. Next question.
I come from Japan, and in Asia Pacific, there's many fintech hubs, such as in Singapore, Australia, Thailand, Hong Kong, such as such. But as far as I understand, there is no fintech hub in Tokyo, I think. What do you think of this? Do you have any comment about this situation?
Yeah, so actually we were talking about Tokyo today, and I think just to mention that the other Asian hubs of Japan, India, etc., aren't represented here, but they are still big players. So last year I was invited to Tokyo for one of the first big fintech conferences by the Nikkei group. And it was really interesting to see that there were more than 1,000 people, I would say, across the few days that came to understand FinTech. But one of the hardest things was that there weren't as many tech players there. So there were definitely officials from government, there were definitely officials from big conglomerates, but the number of players who were technologists who could build tech weren't as high. And I think that that also has to do with the fact that Japan's currency is the safety currency of the world. And so the movement and push to actually move isn't necessarily strong. But Danielle actually went to the same conference that I went to last year, this year, so she may have some insights on what's going on in Tokyo.
Absolutely. I was actually at FinSum speaking there on a Hubs panel just about a month ago. And one thing I will say is that I do absolutely note the lack of actual dedicated FinTech infrastructure in Japan. My understanding, at least talking, but they have a very, very vibrant FinTech community. The FinTech Association of Japan has been around for probably longer than Australia has. Very, very spirited community and very, very closely tied with both the government and the regulatory community. Certainly the challenge we see there is that, or at least as I've been told by my friends over at the association, is there is definitely a really like the banking community there, which is typically where a lot of the seed money for a lot of infrastructure tends to come from, is extremely conservative. And their willingness to engage with the startup community is still quite far behind a lot of the other rest of the region. It's something the government is actually trying to change. They're very conscious that the Japanese banks are actually starting potentially to fall behind some of their regional peers because of the lack of investment, even though there is this community that's trying really hard to sort of innovate, and a lot of them are actually expats. The traditional culture within Japan, and in particular, what I found fascinating was, data, the approach to data and open data in Japan in particular, which, data is the absolute lifeblood of the financial services and FinTech sector. The treatment of data in Japan is almost sacrosanct. And the relationships of how businesses are operating together in the sharing of data is still very much caught in that cultural sort of molasses. So yeah, I absolutely agree with you. I think Japan's trying very hard, but the cultural aspects of it make it very challenging.
Just to add that, I find most of the players in FinTech in Japan more like venture capitals than FinTech startups. Yeah.
Just on Japan, there's a physical location. It's called Finolab. It's sponsored by Mitsubishi Real Estate. And within Finolab, then you have Mitsubishi, Mizuho Bank, etc. So this would be the closest you have from a physical hub within Japan, right? So maybe for everyone's interest, it's not like Japan doesn't have a physical hub. There is. The question is Tokyo structured as a hub, as a city, which just important for everyone's benefit, right?
Great. Well, thank you very much to all our panelists, and thank you very much for your questions. That brings us to the end of this session. So a warm round of applause for all of our panelists for all their contributions. So the next session at InnoTribe will be called Creating Space for Innovation with Microsoft, and it will be in here at 3:30, so please feel free to join. During the InnoTribe, at 2 p.m., at 2 p.m. And so feel free to make time to come and hear that session. One thing that InnoTribe are doing is that we have quite a big campaign going on. So when you go out to get your coffee, I think that it's important to also contribute to one of the emergencies that have been happening around the world, which is the earthquake in Mexico. There have been a number of natural disasters, but the SWIFT team and InnoTribe team have chosen to support the emergency appeal within Mexico. So when you go and get your free coffee, you can donate your currency at the end of the coffee bar, and SWIFT will match all of the payments made across the week. So please feel free to do that. And that brings us to the end of our session. And if you could put your feedback stickers as you go out, that would be great. Thank you, and enjoy the rest of your week.